So, strategies are they're myths. Well, I mean, I wouldn't go so far as calling them myths, but they're not important. They're not that important. The guy next to you, the person who's winning in trading and the person who's losing in trading, they can both have the same strategy, but they probably have different risk management and or different psychology. So, I'm gonna show you what I mean by this. So let's say we got this millionaire from trading. We're gonna call him Tim. Wow, my mouse. You seen this? It doesn't want to. Huh? Hold on. Technical difficulties. Let me fix this. Okay. Okay, there we go. We fixed it. So Tim over here. You gonna work? All right, Tim. Here we go. We got Tim. His real name's Timmy, but we're calling him Tim because we're best friends with him. We're friendly. So his friends call him Tim. His name is Timmy. Okay. Then we got Bobby over here, but we're gonna call him Bob because we're friends with Bob. Bob's nice. We're friends with Bob. So his friends call him Bob. His name is Bobby. Okay. So these two, Tim and Bob, they both have the exact same strategy. It's a very simple one. Price goes into your order block. Here's your order block. Here's your order block. Price goes into it. You either buy or sell depending on if it's supply or demand. So it goes into it. This is a very simple strategy. But Tim over here, he's a millionaire. Bob over here, he's broke. He lost all his money trading. He used to be like Tim. He used to have money. Bob started with more money than Tim. Tim was dirt broke when he started trading, but now he's a millionaire. Bob was the exact opposite. Now here's the difference between the both of them. They both have the same strategy, but Tim over here, he has better risk management. He understands that he cannot have a low risk reward ratio to make money trading. Bob over here, he's like, oh, price is heading to the moon, so I'm not gonna sell. I'm not gonna close my position until then. So they enter. Here's their entry, and he has no stop loss. I was about to draw a stop loss for him, but he doesn't have a stop loss because he's so confident that price is gonna reach the stratosphere. Okay, so Tim over here, he has a semi tight stop loss. Okay, I can't really draw that. Here we go. Here's a stop loss. If it breaks his order block, that's a stop loss. But his take profit is up. Okay, yeah, it's not. Yeah, this would be like a one to what does this look like? 1 to 16 trade, something around there. 1 to 16 risk reward ratio. Bob over here, he has a infinite stop loss. He's not gonna close this trade unless he loses all his money. Unless the bank like his account numbers go to zero. That's when it closes, right? But his take profit is like right here. Okay, so this is a negative, basically a negative risk reward ratio. Okay, it's about as close as you can get to negative. Okay, that's the difference between these two. This guy, he can lose this trade. Let's say price. This is the same price. Price just died. Okay, fell off the face of the earth. Tim over here, he already closed. He lost like $1, just $1 from that trade. That's a failing trade. He lost $1. If he won, he would have gotten 16, right? But he didn't win, so we don't worry about that. He only lost $1. He's a millionaire, right? He only lost $1. That's nothing, right? Bob over here, he's now down. He's now down $5, right? At this moment. Wow. It won't draw. This is. Please donate for a new mouse. This is weird. Okay. Just kidding. Don't donate. I'm gonna give out all this for free because I feel like giving back to the world or something. I'm just a nice guy like that. But this is where price is right now. He's down $5. Price just continues to fall off the face of the earth. Okay. Now Bob is down $20. Now Bob lost. That's a 2, by the way. It just won't, like, the mouse won't work. Okay. Bob has now lost more than Tim would have won. This is crazy to think about. Okay. I don't know how Tim's making millions of dollars from $16 wins, but we're not gonna question that. Okay. What I'm trying to stress is the risk to reward ratio. I know my drawings aren't the best, but hopefully you can see what I'm trying to say just from me explaining it. Okay. So the as I was saying, both of these they have the same strategy, but the difference is risk reward management. Obviously, people aren't as dumb as Bob over here. We love Bob, but he's hella dumb. Okay, he's not very smart. Not very. He's not rocking too much brain up in his noggin. Okay, but we love him regardless. He's that one broke friend or whatever, but he just doesn't understand risk management. Also, another thing is fear of missing out. We're gonna control Z all of this, just clean slate. We're gonna draw. Hopefully, the mouse stops acting up. So there we go. We're clean. Tim over here. Oh, hold on. No way. One delete. One delete. Okay. That's unfortunate. Let's select. Wow, I'm so smart, dude. Or am I? How do I delete? Wow, I'm so smart. Alright, look. We're going to go back to brush. So another thing is FOMO. My handwriting is not this bad, okay? It's just the mouse. FOMO. I just wrote it out. I just deleted it. No clue why. Okay, so FOMO is... Here's our order block. Price is heading towards that. But it stops right there. We got Bob too. We're still talking about Timmy and Bob. Tim over here, he understands what FOMO is and he knows how to cancel it out. He's removes all emotions when he trades. Okay, he goes Zen mode. Okay, when he trades. So he sees this. His strategy is buy when it reaches the demand block. His strategy has not. The rules for his strategy has not been met. So he's not taking no trade. Bob over here. Look at him. Right here. Oh, okay, let's imagine that's not touching. We're in the same situation as Tim and Bob. So Tim and Bob, they have the same chart. And price is not touching for Bob either. So it stops here. Bob's like, okay, whatever. That doesn't matter. Yeah, price stopped here. No, I'm not in no trade, so it doesn't matter, right? So after this, after price stops here, it starts a little up move. Just a small one, right? Bob's like, okay. It got a little close. I know price is gonna go up, but my rules aren't met, so there's no reason. So let's add a little bit more lore to the story. Tim gave Bob this strategy. Tim's like, oh, I became a millionaire from this strategy. All you gotta do is follow these rules. I gave you, and he gave Bob these rules. Now Bob is following these rules. He's like, oh yeah, I'm gonna follow them. I want to be a millionaire, obviously. So Bob sees this. He's getting a little worried because he's like, oh, I know price is gonna go up because it got really close to my order block. It's basically already there, so I should take the buy, right? But he's like, nah. Tim told me only buy when it's at the order block. Okay, so price it retraces a little bit, and then boom, that's a fat green candle. Imagine we're talking candlesticks. I'm not gonna draw no candlestick, but imagine we're talking candlesticks. Little retracement, boom, just explodes, right? Price explodes. So Bob at this point is like, oh my god, I gotta buy. This is, I knew it was gonna go up, so I know it's gonna keep going up because I'm so smart. Tim doesn't know what he's talking about. I'm smart. It's gonna go up. I said it was gonna go up, and now it's going up. I know what I'm talking about. So Bob places a trade right here. Price goes down. Okay, boom. It shoots back up. It retraces a little bit and just breaks the stratosphere. It's to the moon and blows right past the moon, straight to Jupiter. It's heading to Neptune. It's heading to Pluto at this point, okay? But Bob's like, oh yeah, keep running, baby. Oh, I'm not closing this because I'm so smart. I know price is gonna keep going, bro. I'm an intellectual. Tim doesn't know what he's talking about. I'm about to drop Tim after this. I'm not about to be friends with this Tim guy. He's a nobody. He's a stupid millionaire, bro. That's daddy's money, bro. But as he's being all narcissistic or whatever, price just falls off the face of the earth. It was going to Pluto, and then everything went wrong. Everything that possibly could have went wrong. Aliens pulled up to the spaceship and they just gave it fuel just so it can turn it back. It was crazy. It was a crazy turn of events. So Bob is now down crazy amounts. Now he's in debt. Now he has got loan sharks after him, all because he didn't follow his strategy. The strategy that made Tim a millionaire. Now Tim, he doesn't care because he was never triggered in the trade. It went all the way up here. Tim was like, nah, it didn't reach my order block. This is where my order block is. It didn't reach it, so it dies, and Tim doesn't lose anything. He's chilling. Bob over here, I just pointed at my monitor as you guys, because I thought you guys could see it. I forgot this is not how it works, right? But Bob over here, he was really feeling himself, so he got in the trade and just lost money. Now he's down 50K. Never let Bob over here walk into a casino. It's gonna be a bad day for you. All right. So that's what fear of missing out is. You shouldn't stick to your rules. Make rules that are. I'd say make rules for your strategy that are not subjective. Like you shouldn't be. There's this. Wow. Hold on. This is a crazy story. In this one book, the new market wizards. There's this guy. He's a successful trader, and he was interviewed, and his strategy was vibes, basically. I don't know exactly what he was saying, but it was basically vibes. His whole thing was like, I just look at the market, and when I feel like buying or when I feel like selling, I just do it, and I make money. And I'm like, bro, what the heck? But his strategy was all based on feels. I do not recommend all that, but I mean, if that's really what you want to do in life, then I'm not stopping you. If you can have a high risk reward ratio, if you're making money, hey, you do you, bro. That's not me personally. So even people like that, people who are just like hippies or whatever, I don't know if he was a hippie or not, but he was like just in Zen, just meditating as the charts were in front of him, and he was like, oh yeah, it's gonna go up, and he was right. It's crazy, but he had a high risk reward ratio. Risk reward ratio and fear of missing out, they're gonna make you as a trader. Your strategy is so minuscule. Matter of fact, let me create a strategy for you. Just record this, clip this. It's gonna be the winning strategy. I'm promising you, 2024. It's gonna be a winning strategy. It's gonna win for decades upon decades. Okay, so the strategy. Oh, I forgot. I can't delete any of this now, I guess. So we're gonna delete Timmy and Bob. Okay, so just don't work. That works. Okay, there we go. And we're deleting. So this is a winning strategy. Make sure to write this down because I'm about to put you on something, okay? So this strategy, it all starts on the day of the week. I know we're starting on crazy. We're starting talking crazy, right? It's got to be a Sunday. A Sunday. If it's a Saturday, not good enough. So is Monday. Monday is not good enough either. It's got to be a Sunday. Now on this Sunday, you got to be on the two-day time frame. You don't even have to do anything on the 2-day time frame. I know it sounds crazy. I know it sounds like I'm just yapping, right? But you got to go onto the 2-day, and then once you're on the 2-day, you just look at it for like 3 seconds. It can't be any less than 3 seconds. It can be more, but it can't be any less. Once you're done, you go down to the 2-minute. So once you're down on the 2-minute, you have to have rotisserie chicken for dinner that day. Now on that Sunday you have to have rotisserie chicken. But God forbid you have black pepper on your rotisserie chicken. God forbid that, because if that happens, the whole strategy it's negated. You can't trade anymore. You can't trade for the next month, matter of fact, if you have black pepper on your rotisserie chicken. I know it's crazy. But not only that, you have to eat that rotisserie chicken at 3 p.m. Exactly. The second the clock hits 3 p.m., that food better be all up in your mouth, right? If not, don't trade. You're going to lose money, I'm telling you right now. But let's say you meet all those conditions. You eat the rotisserie chicken, no black peppercorn. Make sure it's not black peppercorn. It could be salt. There could be salt. But if there is salt, pink Himalayan salt, it has to be. It can't be any of the regular salt, okay? I'm sorry, I almost forgot telling you guys that. I almost made you guys lose money, right? So it has to be pink Himalayan salt. Once you check all those off your checklist, you're on the 2-minute, right? You draw a order block. And then after that, you have to draw a Fibonacci retracement tool. And on that Fibonacci retracement tool, you have to find the mouse. You have to find the 70. Oh wow, Okay, we're gonna write it bigger. 71 point. God. Okay, point. That's a point. 0.81. If it's 0.82 or if it's 0.80, it's not good enough. It has to be 70.81. Once the price gets to that 78.1, let's say this is 78.1 right here. Once it gets to there, you're free to take the trade. But let's say this is a short example. This is a supply block. If it's a demand block and it reaches the 71.8 mark, you still have to sell. So it reaches here, you still sell because it's still going to go down. So every time your rules are met, you have to sell. You're never buying with this strategy. With this strategy, you're going to make millions. You're going to get the Lamborghinis. Now, obviously, you're going to have the high risk-reward ratio trades with this strategy. Without those, you're going to lose. And that goes for all strategies. And also, don't have fear of missing out. I know. Listen. I know teriyaki chicken may be tempting, but no, you got to stick to your system, dude. It's got to be rotisserie chicken. Teriyaki is not rotisserie, okay? So, rotisserie chicken, God forbid, black peppercorn, has to be pink Himalayan salt if you want it. That's only optional. That's a winning strategy. Now, we're going to cut the bit right now. Obviously, I was being hella dumb, okay? That's not how it works. So don't try. I mean, you could try this. It's going to work if you have high risk reward ratio trades, but this is just me stressing that your strategy is not important at all. The most important thing is psychology and fear of missing out, risk reward ratio. Psychology and fear and FOMO are the same thing. I don't know why I separated them, but risk reward ratio, risk management, trade management also happens. So like, let's say you're in a trade and trailing stop loss is one form, the simplest form. I'm not going to be talking about it. Oh, God. I'm not going to be talking about it too much. No, I'm not. I'm just not going to be talking about it at all in this video. I'm going to talk about it when I analyze one of my trades. That would be sometime in the future. But, yeah, that's what this video has been. You know, just stressing how strategies are not important. It's mostly about risk management and psychology. And don't listen to those trading. Oh, I almost forgot to mention this. Buy sell indicator. Buy/sell. That's an E. That looks like the Johnson logo, but no, that's an E. So buy sell indicators, scam. Never buy them. Never get them. Never get them. Like if someone's trying to sell you a buy sell indicator, just ask them like, if you have this indicator, why not just use it? Instead of selling it to people, why don't you just give it out for free? If it's, since you're already making money off the buy sell indicator, why don't you just use it instead of selling it? They're gonna be silent, okay? So buy sell indicators, never buy them. They're scams. Also, signal groups. They work, but I'm not gonna go too much into it. If you find the right one, which is very rare, I'm telling you right now, very rare. You probably, it's gonna be, I've only seen one ever that actually is a legit signal group that's pretty good with a 90% success rate or whatever. It's crazy. That group is crazy, honestly, but it's not good because what happens when that group dies out? That's it. That's the end of your trading career. You don't know what it is. You don't know how to risk manage or anything. You just listen to the guru, and let's say he gets rusty. You're starting to lose money. Just learn to trade for yourself. Just don't do signal channels. They're not good. I'm not promoting them in any way. There was only one good one, decent. I'm not even gonna say good. It was decent. It was a decent one. Just avoid buy sell and signal groups. Learn your own strategy and make sure to stick to it. Learn psychology and risk management if you're gonna learn anything. That should be what you should be spending the second most time on. The first most thing you should be spending is paper trading. Just getting that experience is gonna be the guy that's let me give you an analogy. The guy that's shooting basketballs, like shooting free throws, he's gonna have a better time shooting free throws than the guy who's reading a book on shooting free throws. Experience is gonna be reading a book or watching videos. Watching this video, you could have in the time you spent watching this video, you could have like practiced with paper trading account. But you did watch this video and you're at the end. So this is where the video ends. This is where I stop teaching you. Basically, just to summarize quickly, don't buy sell indicators, and don't join signal groups or whatever. Your strategy, it can be complicated or very simple. It doesn't really matter. Just risk reward ratio, risk management, and trading psychology is what you need to learn. That's the most important. Next, I'm probably going to be making a video on learning to learn, or like just a structure video, or maybe even an analysis of a trade. I don't know. We'll see how I'm feeling. Which one I feel like should be more beneficial for you guys to learn. Which one would make sense in the order, like to teach it in that order, like, you know, make the order simple to digest, make it easier to understand. So yeah, that's been me.